And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning. Welcome to Financial Fitness Friday. I'm Rich Rosso, CFP, here with Matt, Damon, Doyle.
Good morning.
We're here for you, everybody.
The chat is alive.
The what?
The chat is alive.
The chat is alive. Well, if you consider, if we took Larry Smith out of the chat, there'd be 3 people in there. Larry's on a roll. So that's great. You keep it up, Larry. You keep it up. Well, so we have futures up, S&P futures, NASDAQ futures. We had some pretty sharp overnight losses. Treasury yields backed off. So we've had JP Morgan come out and beat earnings $5.07 a share. That $4.61 was expected. Revenue $46 billion. So this was the first major bank to report and sets the tone for earning season. So what I found a bit positive yesterday, Matt, was the fact that I was watching selling volume on some of these stocks that got hit yesterday, and I noticed that the sellers are absolutely getting exhausted. There comes that point. I don't know if we're exactly at capitulation, but you get to the point, at least temporarily, where the sellers, need to take a breath. Mm-hmm. So you're starting to see that yesterday in some of the stocks that had some massive sell-offs, especially in the growth arena. So I think that's pretty positive overall. So we're looking at an implied positive open today. So, what's good is the fact that in the face of China raising tariffs on the U.S. imports to 125%, and I think we came back with 145%. And I think China, I'm not sure, but I think they came out and said, listen, we're done with this raising tariffs thing. It's sort of starting to get silly now. So we might be at that exhaustion phase.
Yeah.
With Godzilla versus King Kong here.
Well, I don't know that it even matters. Well. I mean, I think their statement said something to the effect of that. We're at these prices, we're not buying your stuff anymore anyway. So it doesn't matter if we go to 1,000,000% tariff. I mean, I think the first time that we had a trade war and they stopped buying soybeans, I don't think they ever got back to buying soybeans again. Mm-hmm. So, I mean, I think they're buying from Brazil. But, they're like, it's a law of diminishing returns at this point as far as they're concerned, because you're not going to get anything into that country now anyway.
No, and listen, did you see the AI component of showing Americans working on assembly lines?
Yes.
It was sad, but sort of funny, didn't you think? How AI interpreted how Americans look sitting there making toasters and all these things that we will not make. Mm-hmm. So I thought that was pretty unusual. To your point, there's going to be trade imbalances with certain countries that we're going to have. You go ahead and you place a tariff on Vietnam. That is an absolute poor country. What in America do we make that they're going to buy? Right? So you got to level off, look at this at a country-by-country basis. But you get to a point in markets where selling starts to subdue. Bad news doesn't affect markets as it did before, and that could be part of your bottoming process, or at least a consolidation, which I think is positive. That doesn't mean you won't take another leg down. I mean, we actually took down some exposure yesterday, right? We waited for like a 50% retracement, and we decided, listen, this is a good time to actually pull some money off the table. Because I know we have this 90-day reprieve, but you also know, Matt, that any darn thing can happen, good or bad.
Sure.
So that kind of volatility, especially for our clients, is disconcerting. And I read a great article in the Wall Street Journal this morning how it's just interesting to see how different investment advisors and investors are handling this differently. And what I noticed in the article is that the individuals that brought up that they were diversified, they didn't have all their money in one sector. They had all these different non-cyclical stocks as well, and bonds and cash. They felt more comfortable to actually add money to their accounts versus the more aggressive allocators, especially who got trapped in the growth area or the momentum trade, right?
Right. Yeah, I think more calls have been around, let's deploy money rather than let's take it out.
Yeah.
Folks are looking at this as an opportunity rather than anything else.
I think because of the fact, and I think here's where some people are absolutely concerned. I get that. But I also think because if you look at the returns on some of our models and portfolios, we have held up really well through this process. So it allows us to keep a level head, which we do based on rules anyway. But it allows clients to maybe look at it a little bit different, don't you think?
Sure. Absolutely.
But you want to be real surgical when you're adding money, right? Because there's some people that want to aggressively add money, and we're trying to help them explain that we don't know where the selling goes from here, right? Just the fact that if you can go through a bottoming process and consolidate here for good, and can we close on a Friday positive? I think that would be a good thing. We'll see what happens.
Yeah, I mean, we're coming into summer months soon, right? We're going to get tax day behind us, and then we're coming into summer months, which are usually, not much to do about anything, really, right?
Right.
I mean, people sell in May and go away or whatever. People are on vacation, and traders are sort of done. So there's not usually a lot of headlines that hit in the summer. So it'll be interesting to see what transpires coming forward.
You have a lot of what I call front loading going on. So there was another article that I read, and it makes sense. And actually, I know some people who have done this before tariffs. They're stockpiling stuff like it's COVID.
Oh, really?
Paper towels, different types of foods that they like, wines that they want.
Okay.
They're figuring, hey, I better get it now because of we might see this tariff situation. So when you have companies that have front-loaded tariffs, remember early on with inventories. So we'll see how that transpires. I think the lack of certainty in the business environment, that does cast a shadow on some of this stuff. I mean,
is that going to affect future purchasing? In other words, is front-loading, is bringing forward consumption?
You're bringing forward consumption
will
right
we
now.
have a boomerang effect in a couple of months when
Absolutely.
we're expecting consumption and it's not there?
Mm-hmm.
Yeah,
and we've done that from time to time with stimulus. Lance will go through all the cycles where we have front-loaded purchases, which means then you will get a lull in that. So it's going to be interesting to see what the numbers look like going forward. So we're going to talk about, there are tariff tactics. Don't say that too quickly. Tariff tactics. Things that you can do. We're going to talk about one, but I also have some other ideas, what you can, from a tax efficiency basis, do in your portfolio. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
The chat this morning makes me feel like AOC going through an economics book. Exhausted. Oh my goodness gracious. Robert keeps talking about dear leader. You think he's referring to his wife? Could be.
Yeah, I'm not diving on that one.
So, obviously, when it comes to corrections, there's some things you can't control, but there are many things you can. First of all, your allocation going into it. We've been talking about since the middle of last year how this year is going to look differently and that your portfolio should be balanced, and how we were trimming out of the most overheated stocks when the water is calm and you've got buyers all on one side of the ship. We were over there on the other side trimming things out, and I think that that's very important. And I think that, there's some things you do beforehand when you're more in control. Well, when you go through the process like this, there's some tax efficient ways to look at it as well. There's some opportunities. So for clients, for example, that have some clients that I know that had purchased some semiconductor stocks that are down, right? We actually, but we also have some gains from last year and so forth. So we actually took those losses, Matt, and then replaced them with other stocks in the same category, right? So we wanted to try to, maybe be a little bit more aggressive on the tax loss harvesting, especially for where these people wanted these kinds of companies, but there's so many other companies to look at in the category. Clients that maybe wanted to sell Taiwan Semiconductor and then purchase NVIDIA. They wanted to be in the space, but they wanted to take advantage of the loss because of all the gains they've had over the last couple of years and not much in losses. So some client, T.S. Leong says maybe replacing stocks with ETFs, that could happen too. Some clients that might be selling some of their semiconductor stocks and actually buying into semiconductor ETFs. But so they're not getting out of the market, which is important to understand. They're still comfortable with their allocation. They're just fine tuning within. And I notice when you make these kind of surgical moves, Matt, you feel, it's really based on doing what's right for the portfolio, but there's something about it that also feels good because you're not scared. You're just taking advantage of certain tax arbitrage and doing something that helps you feel in control. I think that's good.
Yeah, I mean, creating if you want to call it like a loss bank is a good thing, I think.
As long as you don't lose track, right?
Yeah, well,
But yeah.
take advantage of it. And those things don't, they're like spam. They don't expire. And you can use them as markets go up. I mean, we've had, 12, 15 years of just up, right? And you've seen the benefit of that. And clients will say, well, I don't want to pay taxes. Well, taxes might be a 4-letter word, but paying taxes means you're making money. And so when you've done that for so long, now's the opportunity to go in and say, well, let's take some of that red off the table and put it in our back pocket so that we can eat away at that going forwards in the future.
Yeah, or clients are waiting 31 days to avoid the wash sale rule. So maybe you want to own that stock again, but you actually have these gains you want to offset for the year. So listen, you take a chance. You think in 30 days it's probably going to be volatile, and I'll look in 31 days, I'll buy it back. That's a strategy as well, overall. So to Matt's point, when you're looking at, I guess markets are trading in the same range they were about a year ago, maybe last May, is where we are. You would think, based on mainstream media, that we were in the next Great Depression. So that's another tough thing that I'm having a problem with, where clients, when they call and I call them and we go through what the portfolio has done this year, they're sort of speechless, because based on what they're hearing in the news, they feel like, oh my gosh, I must be getting annihilated. And then I had one client call me yesterday, because I'm hearing all this terrible things on the news. Like, it makes it feel like there's a depression coming. But I looked at my account and it looks okay. Is that right? Is that a computer issue? is it not updating? Yeah. And I went, no, let me help you understand. These are the times your financial advisor really can help you cut through all the bombastic headlines and the short-term news and the clickbait to actually help you make sense of it. Listen, we're fiduciaries. If we thought it was time for you to go ahead and get the heck out, and these headlines are true, we're very happy to tell you that.
Right. Well, I mean, there's a forest in the trees sort of issue going on too. I mean, we have certain clients that are very much, like you're talking about, very much the forest. I think through this up and down, over the last 3-4 months, portfolios, at least the portfolios that we manage, have weathered it very well. But are there positions that are down more than you probably want to see? Yeah. But we don't look at, of course, Lance and Mike look at, the fundamentals, but on your overall trajectory, you're right, which is meeting your goals, sustaining your lifestyle, being able to afford and finance your retirement or your boat purchase, or whatever your individual goal might be. You got to look at the forest, not that individual tree. The tree makes the headlines. So I would just say probably the best thing you could do is delete your Facebook and turn off the news. So it's probably, if I could ask clients to do one thing, it'd be that. I don't think anything ever good has ever come out of Facebook, really. Yeah.
Social media in general.
Yeah.
I think it's been one of the reasons why culturally we've fallen apart. There was a great article in the Journal talking about, listen, you can bring back manufacturing, but there are companies that have no skilled labor. People want to be digital creators, whatever the heck that is.
Well, I don't know.
It's
look. I was having a conversation with a person, and I said, you in terms of historical context, right, at the turn of the last century, right, 18 to 1900, you had about 25% of the population was employed in agriculture in some way, shape, or form.
Absolutely.
Right. And then you fast forward to 2000, 100 years later, and it's 4% of the population.
Yeah.
And I said, why do you think that happened? And the response, of course, came from, mainstream media. They took our jobs. No, they didn't.
No, you didn't want those jobs.
Well, I mean, you had a tractor. You had a tractor
Right.
come in. You didn't need a family of 10 to do 100 acres. You could have a farmer with a tractor do 1,000 acres.
That's right.
Right. And so in a similar vein, you know, to the extent that AI is going to do things or we have automation or whatever it is, you know, from that 1800 to or 1900 rather to 2000, the unemployment rate was relatively the same.
Yeah,
I mean, you still
pretty
had a
stable.
4%-ish unemployment rate. So what happened to those people? It wasn't that you know our jobs were gone. It was that those people got retrained and specialized in different areas because they didn't need to work the farm anymore.
Yes.
So you know, there's shifts that happen in the economy, and they just do. So will manufacturing come back? Yeah. Will it? You know, will you be putting the toothpaste together, or will you be fixing the robots that put the toothpaste together? I don't know.
Yeah. No, I think you're right. So the Labor Department, when you look the National Federation of Independent Business Survey comes out, and it showed that 40% of small business owners in March reported job openings they couldn't fill. Construction, transportation, manufacturing. There are twice as many job openings in manufacturing than in the mid-2000s. So we're at some form of worker shortage in that area, even if it's skilled labor. Obviously, to your point, with robotics and AI, there are a lot of great books on AI I've been going through that will show that we need to have people that are going to skilled labor that is going to handle maintenance of those robots or AI mechanisms. And, you know, we don't have them. So the labor force participation rate among working age men is now about 5% points lower than it was in the 80s. 3.5 million fewer men between the ages of 25 and 54 in the workforce.
Okay.
Where are they? Where do you think they are, Mike? They're not in the chat because they're not crazy.
Well, I haven't seen Ed in a minute, so Ed might be
No, he's in there.
making his way through.
Yeah. I think he's trying to find a creative way to use tractors to snuff somebody out. Larry Smith said, no Larry is trustworthy. Larry Fine was trustworthy. I read about the Three Stooges. Larry Smith, maybe not, but Larry Fine, yes. So I think we have a real dilemma with skilled labor, especially among working age men. So in this report, they're saying, where'd they go? Some are subsisting on government benefits or living off their parents. 17% of working age men on Medicaid, 7.4% on food stamps, 6.3% on Social Security, obviously disability payouts. But they work as self-employed traders, financial bloggers, and something called Robin Hood Bros and retired financial engineers.
Robin Hood Bros?
Yeah, those are, you know, they trade on Rob. That's what they do for a living.
Oh.
You know, except they've been blown out of the water this year.
Probably.
Now they're over there working at Buc-ee's. Well, not even at Buc-ee's. 'Cause don't you dare take my job at Buc-ee's.
No.
We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your your payout? Lump sum or pension annuity? Retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My wife is not a basketball fan. She never watches basketball. She doesn't understand basketball. She pays no attention to basketball at all. So she knows nothing about basketball.
The Real Investment Show podcast.
But her office had a March Madness pool on who would win March Madness. She goes, nah, I'm not doing that. Just do it. You might win some money out of it, right? And so she's like, fine. So she fills out a bracket. Well, they came to her yesterday. She's number one. She picked Duke.
At realinvestmentadvice.com.
This is the epitome of a blind squirrel finds a nut every now and then, because I don't even know if she knows who Duke is, my basketball phenom that I live with.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
You're listening to The Real Investment Show.
So it looks like pre-market, you have JP Morgan, Wells Fargo, Morgan Stanley reporting. They're all up about 1.4 to 2.27%. So obviously we're starting out strong. Let's see if this momentum can last throughout the day. Matt? So net revenues from Morgan Stanley, $7.33 billion versus $7.37 billion. I'm interested in some of these consumer companies, what the forward guidance looks like in the face of tariffs and maybe people reining things in as we go forward. So I do have some clients, this is anecdotal, of course, but like we tell them their plan is fine. See, I think this is where our financial plans shine because clients are sort of surprised when I can tell them that they don't have to change anything because we've built this into forward-looking returns and how we do our simulation. So they're like, really? I'm like, listen, if you want to, sure, I understand if you may want to just because you feel better doing that. But that's in your control. And I think that that's the benefit of not only doing a financial plan, but one that's pragmatic and looking at conditions, don't you think?
Yeah, I mean, you try to account for as much as you can within certain, probabilities. We use different forecasting models, but, people, I think in the end, again, the forest and the trees, I think to refocus and make sure that our overall view is looking at the forest. Because that's what it comes down to. Can I put gas in the car? Can I go on my vacation? Can I enjoy my lifestyle?
Right.
That's really what matters. We can take jib jabs about NVIDIA or whatever stock it is and have a conversation around those, on a day-to-day basis. But in the end, it turns out to be noise, and you forgot about it, 30 minutes later.
Totally agree with that. So I think that what you want to keep in mind is keeping a level head, focusing on your financial plan. What's that rate of return that you need? Speaking to your financial advisor to see if there are adjustments you want to make. Some people will make adjustments just because it just makes them feel better. In my gut, it just doesn't feel right now, so I'm going to wait. Well, that really is your decision.
Right.
Plan is saying, go for it. And I think that's the emotional element of having mostly variable assets in portfolios, Matt, as opposed to guaranteed income.
Right.
Because if I was getting, say, for example, I had very little in variable assets at all, if at all, and I'm just going to I get my Social Security, or I have a pension, or I've created my own through annuities, well, my check's not really going to change. So I still might take that trip. So even though you might tell someone who has most of their money in variable assets like stocks and bonds that they're okay, something psychologically keeps them from spending it, reining that in.
Right.
Will things get worse? Will the plan change because the markets deteriorate? It's also very difficult to have the conversation with clients and that we don't have static portfolios. The entire business our business is based on static portfolios. We have more of dynamic models, right? We can accordion these portfolios. We can increase exposure, decrease equity exposure. We're not day traders. We use indicators to do so, but we can extract money out of the market when indicators are hit to pull stocks out of the market. So when we show a lot of the static returns and worst case scenarios, we know our numbers are probably going to be better. Our downside capture is going to be less, but we still keep those in the plan as such.
Yeah. Well, there's a couple different things happening there. But, to the latter, we build our plans to a certain degree to be, conservative.
Yeah.
Which is great. At the end, you don't want to be sacrificing lifestyle. If there's more that you could do or more fun you could be having, but there is that emotional aspect. There is
right.
the, as I like to call it, there's the two sides. There's the art and the science of everything. We can do math in all sorts of ways and show projections, but, if a client wants to have X dollars come in every month, or if the client needs to have X dollars in a savings account as their sleep at night money, that's the answer, right?
That's right. So
everything is, when we're putting a plan together for somebody or we're helping them through that, and I don't know how many clients over the years, it's a big transition, for example, to go into retirement. All of a sudden they're not getting that paycheck that's not coming in every month or whatever it is, and it takes an adjustment period of getting used to, living in a different way. But the reason why you stockpiled that money was for this purpose. Right.
It's amazing when it comes to that harvesting element, right?
Yeah.
People have a very, very difficult time, as I call going from Tim the Tool Man to Wilson. It's that transition over the fence is very difficult. Wait, I put all this money away and now I'm not saving anymore, but now I actually have to actually pick the fruit from the tree.
Right.
That's a psychological element that takes a while to work through.
Sure.
I've noticed like around year 3, if you set up auto debits and people are sort of getting like a paycheck from the account and their living expenses, they sort of know what they are, they're in a groove, they feel a little bit more comfortable. What do you think?
Yeah. It takes an adjustment.
Yeah.
I don't know how many times this has happened, but I'll be there in a meeting and the client just went through retirement, and we'll just use the typical example, right? There was he was a breadwinner and she stayed at home, and then all of a sudden, he's there all the time. And she's like, can you find something for him to do, please?
Can he just get out of here?
Yeah. And I had one time, this is just burned in my skull. It's amazing what you remember, but I had one time he went to get a coffee or the bathroom or whatever, and she mentioned the same thing. But he was still within earshot, and he comes running back into the office, and he goes, "I've been going away for 50 years. If you've got a problem with me at the house, you can find something to do." So back to your point, there's always a psychological aspect to this that we as advisors get microcosms of insight into our clients' lives. But, it's not new. It might be new for you. It might be new for you to go into retirement and expect the portfolio to produce an income for you. But we walk clients through that all the time. And just because NVIDIA's down or whatever the headline of the day is, that doesn't change the overarching desire to be able to maintain your lifestyle.
Larry in the chat goes, "You won't catch me dead in another country," and Ed's thinking, "I'd like to."
Ed took that as a challenge.
He did. He says, "Let's make this happen." It is such a psychological issue. But again, we were talking about before the break situations you can control when markets are down. And another thing is, and I have been bombarded with them, is Roth conversions.
Mm-hmm.
So we have seen situations where, especially in tech stocks, where if we're moving stocks, that we are taking depressed prices on these stocks, transferring them into Roth. And hopefully what we're going to see is that tailwind recovery in the Roth. So this is a good time to actually go ahead and consider your Roth conversions. And I think over the last 2 weeks, I've done about 12.
Oh, wow. Okay. Yeah.
Overall, because the opportunity, what's nice is when I get calls and emails from clients when the market's at extreme turbulence and they're sort of excited. "Let's do the Roth conversion today, Dad. Let's open that gift under the tree." And I'm like, "Yeah, okay, I like this. I like it. And we go ahead and we move positions or cash and purchase based on the depressed conditions. Those which talk about clients that we have actually educated well, that they themselves are keeping track of looking at these downturns as opportunities, especially those we recommend surgical Roth conversion. So it's nice to see when sort of there is something for clients to sort of be excited about when markets are volatile. Who would have thought Roth would be the gift under the tree?
Yeah.
Not Larry. We don't want him under the tree. I watched a TikTok video yesterday. Not TikTok, Facebook video. I don't know why. I was just scrolling through. And this girl slides under the Christmas tree. She goes, "My family won't be getting Christmas gifts this year. I'm the gift." And I was like, "Yeah, I'd like to see that tree fall on you." That's how people are making a living today. She's got like 11,000 views. I'm like, why? And there I am looking at it because it's so dumb. I'm like, what is this? Darn. As Matt would say, darn Facebook.
Yeah. I mean, what's that? I'm an influencer. Okay. Well, I'm a war hero on, video games or whatever.
I saw a cartoon. It was sort of depressing.
I don't even know what we're doing anymore.
Yeah, I saw a cartoon where there was a gravestone of a guy of a World War II vet, born and died, and then next to it, digital creator, born and died, and you really get to see the difference of value.
Yeah.
You could tell my grandkids I was a digital creator.
I like the reverse side of that. You see a woman standing in front of the BMW, and then she's like taking photos for her tiki-talkies, and then all of a sudden there's a guy screaming from a second-story balcony, "Get away from my car!"
I like how Matt calls them tiki-talkies. They sound less evil that way. Tiki-talkies. We'll be right backy.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Larry Smith on the chat said he had a girl under the tree once, and then she called the cops when she realized he was in the house. So we're going to talk about, obviously President Trump has been talking about the taxation element of Social Security. There's something out there called the tax torpedo when it comes to Social Security. Depending upon the next dollar of income, that creates 50 cents or 85 cents more in as far as what it will do to your tax rate. Your tax rate may be higher if you're in that window of 50 to 85% taxes on Social Security. So there's something out there called the Retirees First Act, which doubles the income a retired couple can receive before paying income taxes on their Social Security. The bill would index the base amounts to inflation starting in 2026. So this is new legislation that would increase the income thresholds at which taxable Social Security payments, become taxable. So when you look at these benefits, $34,000. The base income amounts above which benefits are taxed to $34,000 from $25,000 from single filers and to $68,000 from $32,000 for married couples. This is rarely indexed at all. Matt, this seems like a catch-up to some degree as far as what we're trying to do. So I don't think, again, this all puts strain on the trust, but I don't think this is a bad idea to get these things indexed. As far as taxation, because we've never really done it. So now there's talk about doing that.
Yeah. I mean, it is a tax, right? When you're working, Social Security is a tax. Mm-hmm. And if you're a W-2 employee, you're paying your 7% and the employer's paying their 7%. So you've got 14 and whatever. I'm just using round numbers here.
Yeah.
Right. But when you start getting that income, I see the logic behind, if not indexing, making the whole payment just exempt. Because you've already, it was a tax. You're just sort of, in some way, getting it back.
I think you could do it if you did a few things. So President Trump was talking about maybe, because again, in our plans, I am keeping the Tax Cuts and Jobs Act as sunsetting. I just don't feel as confident in it is going to through at least in this iteration of what it looks like today. But he talked about raising taxes on the highest wage earners. I'm thinking instead of that, remove the threshold on the Social Security wage base. If you really want to do these things for Social Security, and I sort of like those, right? Increase the payroll tax part that allows us to do these things with Social Security and keep it solvent. Right. I mean, regardless of what you believe about Social Security, regardless of what you believe as far as, well, I would have been better with my own money and I don't get as much. It is what it is. I mean, there's no change. It's not going to change. There are too many people who depend upon it. So we just have to look at how do we shore it up. And to your point, Matt, if I'm already retired, it would be great to know that I'm not paying taxes. And you know what? A lot of seniors or a lot of people who are taking Social Security, they don't realize they're paying taxes on it. Like they may find out a year later, or if we tell them, they go, what? I pay taxes? That would be socialism, Rosso. Well, that's what it is. We got it. That's the system. You're not going to be able to take it away, you know?
Well, I mean, there's supposed to be a redistribution. I mean, that's what, you know, for as much as this might be my last show.
Not with that shirt. You're coming back.
There's supposed to be. I mean, that's what the government's for. You know, and
take money away and give it to Well,
it is. I mean, there's things that free markets cannot provide. It's, you know, say what you want, but that's just how it is. You're not going to have multi companies doing firefighting. You know, what if my house catches on fire and that other guy next door, his house catches on fire and he doesn't have the right firefighting insurance? I mean, there's things that a government has to provide, you know, sanitation and, you know, trash services and water. And I mean, there's just stuff
they used to do that. They used to, like, you know, there used to be roads that you could drive on and you get all your trash would get picked up. Yes, I agree. Yeah. I think they're failing on those basics, but I do agree. Yeah.
I mean, you know, I would love to believe that free markets can solve everything, but they can't. You know, so in terms of the tax piece, I mean, you know, you've got three main buckets for taxes, right? You've got consumption tax, which is sales tax. Yep. And you've got property tax. So consumption tax really hits lower income folks the most.
They spend everything.
Well, right. Yeah, so as a proportion of their income or expenditures, you know, a lot of it goes to consumption. Whereas, you know, a property tax is generally targeted toward middle class, and then an income tax, which is a progressive tax, which means it increases. You know, you step into higher rates as you earn more. You know, those are meant to affect the larger, the higher class, or whatever you want to call it. So you got to have, you know, that sort of tripod of taxes makes sense. And where is the balance? I don't know, but these gimmicky things that come out, whether, you know, it's a deduction or Social Security or here and there, you know, I think you're just operating within the margins. I don't know that any of that pushes the needle one way or the other.
Yeah. Java Joe says eliminating the income cap for Social Security would add enough time to the fund. Yeah, I think you're right. I think that would. Listen, it's nice to think, and I think some of you can, especially you're listening to a financial show in the morning like this, just because Larry's got no life. That's why he's there. But I understand why Larry's there. His wife goes, "Get in the basement." This is Texas. We don't have one. Get in it anyway. Dig a hole. So I think that if it were true that people could handle their own retirement, at least the masses, then when pensions went away and defined contribution plans came in, you would see those things overloaded. You would see more money in those things, and we would approve that. Hey, people are really good stewards, the majority. If you wanted to do that, where you wouldn't pay into Social Security, you would have to take an exam. Right?
Like a health exam?
financial exam.
Oh, financial. Okay.
Like financial literacy.
Okay, gotcha.
Like, what are you going to do?
Mm-hmm.
Right? Oh, Edith, yeah. Oh, Archie. Get in there. I can't ever do an Archie impression. Can you do an Archie impression, Brent? Yeah, dingbat. Get in the basement, Edith.
Meathead?
Oh, Archie, you
Meathead?
Meathead.
Stifle, Edith.
Yeah. If you could see Brent's face, he's actually got the actual lip move that Carol O'Connor did when he would say that. He had this like upward kind of
corner of the mouth.
Thing.
To the moon.
Yeah.
That's Gleason.
Did you see? Speaking of Edith, the Janet Yellen came out yesterday saying how terrible President Trump's policies are. You know,
Pot.
It's like
meat kettle.
Yeah. Oh my goodness, it's just pretty funny right there.
Janet.
Some of these people, it's like, you got to wonder. It's like when they're doing their job, you can't get a word out of them, and then they leave whatever they're supposed to do.
Talking.
They can't shut up.
Yeah.
Alan Greenspan was famous for that. He wouldn't say a word while he was chairman of the Federal Reserve, and then, his terms expired or whatever. He retired, and the guy for 10 years just wouldn't shut up.
And he needed a translator.
Yeah.
Although he was always very tempered, even when he did come out. He wasn't I don't think he would agree with any of this bombastic, crazy things that we hear, whether it's from the Republicans or Democrat representatives using, the curse. I think there was this decor that we had, level of professionalism that's long gone.
Yeah. Well, I mean,
so
it's all about clicks now.
Yeah, it is.
I mean, you want a personality, somebody that can get you to click on that. There's too many. We're just bombarded. I think we're just all hit all day long with information, and it doesn't even matter. As we saw, what was it, Tuesday? It doesn't even matter if it's real or not, right?
Yep.
Here comes some random bot posted some nonsense on.
Yeah, that's right.
And
That's
then
right.
all of a sudden there's a swing in the market.
Yep. Java Joe, Yellen should have locked in 1.5 for 20 years. Yeah, Yellen made a lot of mistakes, Java. It's not one of my favorites, so when she came out, I had a good laugh yesterday. Oh, my goodness. Look who just got out of the coffin.
What are you saying? You don't like my hairdo anymore? You used to love it.
No, Mo loved it over at the Three Stooges. So the thing I will say is, let's see how markets close today. We've got a little bit of positive momentum with what's coming out of the banks. It would be nice to see us close higher on a Friday, but we shall see. I guess the one thing I would say is stay cool. Based on what Larry has been saying about his wife in the chat, he's living in the doghouse this weekend. So let us know how you're doing with that, Larry. And you all have a great weekend. It's supposed to be nice weather, I hope, where you are. And Lance back on Monday. You all take care now.